We are now recording. Double checking. Audio's looking good. Double checking. Actually, won't you both say something?
GameStop.
One at a time.
Go ahead, Mark.
Hello, everybody.
Okay, that seems good enough. We have started. Go ahead, Mark.
It's time for the AxisOfEasy podcast.
As soon as you said we have started, go ahead, Mark, the video froze. But welcome one and all to the AxisOfEasy Salon number 36. It is the 28th of January. We're recording this. And instead of going by location of where we are, let's go by what the temperature is where we are. Jesse, what's the temperature out there?
It's pretty cold. I think last I checked it's about minus 20, which out here does not trigger any cold alerts. That's just a Thursday afternoon.
Okay, and I'm Mark Jeftovic, coming to you from minus 12 Celsius. And Charles, you're at what?
About 70 Fahrenheit and 21, Celsius.
Okay, Charles wins. What do you guys want to talk about today?
Actually, today's a little chilly. Usually it's like 24 or 5 C.
I thought we were going to talk about stonks.
Yeah, because in the email I sent out, because I think this is about more than just number go up or number go down with this entire phenomena. Because I thought in previous like Bitcoin manias, when one person came up to me on the street and started talking to me about Bitcoin, like I said in the article I wrote this morning, my brother-in-law asked me about it last week, and I thought, oh, is this getting a little toppy for me? Is this the shoeshine boy moment? And then all that was nudged aside. In the last 72 hours, I'm walking the dog. People are talking to me about GameStop. I'm like I meet my butcher in the parking lot, and he's talking about GameStop. Just everyone is talking to me about GameStop and these crazy guys on Reddit. And I'm wondering if, aside from just the mother of all gamma squeezes or short squeezes, are we actually seeing this tip over into a change of psychology in the overall markets, where people are kind of starting to wake up and realize, hey, guess what? The market really is detached from reality, and it's not a barometer of the economy the way it's supposed to be. And there really is kind of a class divide between who gets to play these games and who doesn't get to play these games.
Well, I think for sure we've reached a tipping point, and the nature of that tipping point, I think, is purely speculation. But just as with anything with this pandemic, there's no going back to Kansas. Like, we've really entered into a new world. And I say that in the sense that I'm not as hopeful is not the right word. I'm not as sure as you are that the exercise here has been against delusion, or that the exercise here has been a conviction of the stock market as a game of fantasy. If anything, I think what we've seen is more people saying, I want to join the fantasy, right? More people saying, yeah, this is a game. It looks like fun. Let's play, especially if the other guy loses, right? And I saw this, there's a lot of memes going around because it's a meme moment. But I saw this meme, this Lord of the Rings meme, where, it was Legolas and the dwarf, and the elf is like the capitalist saying, I never thought we'd be fighting together. And the dwarf is the communist saying, yeah, I know, here we are on the same side. We both hate Wall Street. We both want to go after the hedge funds. Imagine that. And so I think there is a weird moment of, the enemy of my enemy is my friend. But I'm not so certain that the casualty in all of this is delusion. I think quite the opposite. I think the fantasy has become more accessible, and it'll be interesting what the response is. Whether the other side of the fantasy owns up to the fact that it's a crooked game, or whether it doubles down on its own lie, which is where this existential crisis could grow. and you start seeing institutional crisis and failure at a much larger scale than just the stock market.
Yeah. Well, let me start by saying I recommend everybody read what Jesse and Mark have written about this, because they each come from a different point of view. And I think they're both informative of the context. They sort of speak to the context of this. Mark more about the mechanics of the uprising, if you will, where hundreds of thousands of small bit players have sort of crowdsourced leverage, which exceeds that of hedge funds. And I wanted to kind of start my little contribution by saying that this is an uprising, and it is a crowdsourcing, and it is like a lot of what we talk about. It's a network state that has chosen hedge funds, which used to be the dominant force. They've targeted them, and due to their network size and the network effect, they can take down billion-dollar hedge funds and destroy them. And they're targeting them much like a video game, to speak to our previous conversation. So what the source is now not asteroid or something. It's like you look for the most shorted stocks, and the ones where that short interest is held by a handful. The smaller the people holding the shorts, the better, because you're targeting a smaller number of entities. And then you use the mechanisms of options. And I'll just cover this because I've traded options for like 25 years as a small fry, right? Obviously, I'm not running a hedge fund, but I'm pretty familiar with the mechanics of it. And what you need to know if you've never traded options is it's 100-to-1 leverage. If you buy one single option, that controls 100 shares of the underlying issue. So if you get a bunch of people to go out there and buy tons of options, thousands upon thousands of options, or tens of thousands, then you control, or you're leveraging, millions of shares. And so this is why these hedge funds have blown up and are lost $2 billion is that the people trading options on the Reddit board, you only have to buy 10 options and you're controlling like 1,000 shares. If you add that up, and they're basically forcing these hedge funds to buy millions of shares at prices that could be $10, $50, $100 above what they originally staked. And so it's an incredible game where basically you take your musket and you line them up in a certain way, and you've got a machine gun, or a nuclear weapon. It's kind of like those. I think it was a Far Side, or no, it was another comic where if you the character scraped off a tiny bit of the radioactive material from smoke detectors, and he cleaned off like 1 million smoke detectors, and then he had enough nuclear material for a bomb. It's kind of like that. And so I think that's what's really, to kind of summarize, what's really interesting is mostly options are not, it's hard to weaponize options in something like an index like the SPY. But if you take a small company, like under $1 billion, and with very few options out there, then when you start buying options, then the market makers will write those options because they're going, hey, this is easy money, right? This stock is $6 or $10. So they'll just write these options, but then they have to buy the underlying shares. So because if your option expires and you execute that option, you get to buy 100 shares at the set price. That's what an option is. And so it's a way to weaponize something that is normally out of the reach of a small fry. Very fascinating.
It's beyond fascinating. I mean, I can't help but just sit here with a basket of popcorn because I'm not exposed to any of these positions, and it really, because anyway, that aside, it does open a gigantic can of worms, because one of the things I would, maybe gently push back on a bit, Charles, is you said, overall you can't use options as a strategy to move larger things, but I think that is part of the plumbing of Wall Street. It's systemically used. I mean, there have been, if you follow the Tesla charts, podcast or Montana Skeptic or the Tesla Q Collective, which is in itself another fascinating internet phenomena. They've been saying that a large chunk of the rise of Tesla shares over years has been by initiating these gamma squeezes. So to differentiate between a short squeeze and a gamma squeeze, the short squeeze is when the short sellers are short and then someone forces the price of the stock up and the shorts have to cover it. And Charles, you were describing it with the way the market makers operate. A gamma squeeze is when you're forcing the price of the stock up because the people making the market, the guys fulfilling the order book on those options, they have to buy the stock to cover, to hedge their option positions. And so there's also been a lot of speculation over the years and a lot of debate within like financial commentators that the powers that be, the plunge protection team, the Fed, whoever, have been strategically buying options on the indexes at strategic inflection points to prevent failures of technical support and to sort of ramp the market higher at key times. And it leads to this idea that we live in a manipulated market. Now, some people who are very informed and very experienced market people dispute this vigorously, and some are convinced it's the truth. And some of the best debates I've seen on that are on the QTR podcast, Chris Irons, and saying that this is definitely happening, and like a Bill Fleckenstein saying it's not happening. The Fed is too stupid to be doing that. Well, he doesn't put it that way, but Fleck says it's not happening. Irons says it does, and it's a pretty interesting conversation. But all of this leads me to something even bigger. Like even before the global financial crisis, there was this notion of the derivatives bomb, right? That if you added up the notional value of all the derivatives that were outstanding, that all of these hedge funds and private equity firms and investment banks were writing to each other these collateralized debt obligations, and these, you can even have derivatives of derivatives and synthetic contracts and all kinds of things. If you add up the notional value of that, it was something, I can't remember the number, but it was somewhere, it was like, it's 200 times the value of all assets on Earth. Like, it was just ridiculous. And so people would say this is a huge derivatives bomb, that when it ever goes up, it's just going to be like antimatter and matter colliding and just sucking the financial system up inside of it. And people would say, well, no, that can never happen, because these would net out these and these would net out these. And then you'd get this manageable chunk of toxic derivatives at the bottom of it. I don't know, right? And so the global financial crisis came and went, and we still have all these derivatives. And now, because of what's been going on lately, I would say that ball of derivatives is even higher. And now, exactly as Charles has been describing, we have like guerrilla warfare. Now it's been weaponized. And before it was sort of like a clandestine thing that people inside the club were saying, yeah, we're going to like ramp this stock or take a position. And there's always been the odd entrepreneur along the way who's been ranting about things like naked shorting, like Patrick Byrne from Overstock. I mean, I think his career was practically ended by naked shorting because his vendetta against them sort of turned him into a kind of pariah who then got almost character assassinated by the street. And so naked shorting has been a problem for a long time. Derivatives have been a huge problem that everyone's known about, but only the in-club uses them. And now it's like a Gary Larson cartoon. Oh my God, even the Jones have the bomb now. And so, even the autists in Wall Street Bets have the bomb now. And everybody's using the bomb. And I really, like, we can sit here and go, this is kind of hilarious to watch. But part of me is like, I don't know if it's going to end here. Like, I don't know if when they write the history books about this episode, how this equity bubble finally popped in 2021, if it's going to be, yeah, it came from the strangest place. It came from Reddit.
See,
and it kind of...
and that's where we diverge. I'm not convinced it's going to pop, right?
You think it might just accelerate?
Well, and to I don't have, this is not my area, right? This is not my subject I'm familiar with, so I have to use metaphor largely in response to what I'm trusting in terms of you guys' analysis. And from what I've heard both of you, not just today, but for as long as we've been talking, is that it's based on fantasy, right? That there is this myth, this con, that is the contemporary monetary system, that is contemporary capital markets. And, what I'm hearing in this is not that people have woken up. And I'm not saying people are asleep either. My point of using the LARP, the live action role-playing metaphor, is people see that it's a game. They don't care it's a game. They're bored and at home. It's like the casino. They know that the house always wins, but they still want to go play, both because they have the exceptional belief that they are different. And I do think that drives most stock market investing, that people know the game is crooked, but they do it anyway because either they think they're smarter or they think they're luckier, and that's good enough. But in this case, I think, especially in the context of the Redditors, there is a thirst in the game. There is an adrenaline from being part of the clan that, allows for these raids, especially when they have real world effect, that they're real. They reinforce the fantasy because they're not oppositional, right? None of these guys are saying down with capitalism. They're saying down with those other guys, our competitors. But they are reinforcing the fantasy. They are reinforcing the matrix. And in so doing, I think, they're just adding new layers of complexity to the bullshit. But it's still bullshit. But it's bullshit that has, a larger appeal, right? Because that's part of what this is new blood coming into the system and therefore the system being refreshed. But I think to your point where I perhaps feel that your anxiety is well placed, is that this is going to spread. It's not going to result in the collapse or the crash that we've traditionally known, but it is going to result in some ludicrous behavior that defies logic. So for me, the part of what I was thinking about today is, I can think of 3 types of governing society that I've seen in my lifetime: violence, markets, and democracy, in that order, right? Violence is often the most frequent. It's why people have wars, to settle conflicts. Markets are a way to settle conflicts and to govern a society. And I admit on a romantic level that in theory, when they work, they'd be great. But they don't always work, and that's often the role of democracy, right? To have policy intervene where markets are insufficient, or where markets are inadequate, or where markets are dominated by a single monopoly and therefore are not an efficient means of allocating a resource. And so I almost feel that we're stuck in a similar kind of debate right now. And rather than us being rightly critical of the role of markets, we are instead celebrating markets as the place in which this activity should take place. And most of us are going, what are you talking about? That's absurd. GameStop, it's not worth that much money. Tesla, it's not worth that much money. Insert name of X, it's not worth that much money. So, that's where I wish this was a moment where people were reassessing the value that markets play as a governance model for our society. But I think quite the opposite. I think markets are winning, unfortunately. Dogecoin 2021.
Can I jump in for a quick second, Charles?
Sure.
We're not actually, what you said is not really, we're not disagreeing with each other. I think you might think that I'm implying that this could lead to a tipping point and sort of a collapse, one mother of a reversion to the mean. And I'm not saying that at all. I'm saying, that could happen, but it could be a tipping point into a even more chaotic state, which is, I think, what you're talking about. And what comes to mind with me is, I used to remember the name of this episode because I was going to write it up in a blog post, but there was an episode of X-Files where it turns out that these physicists were being murdered, and it turns out that it was one of their future selves had come back from the future to murder himself and his colleagues because he was trying to prevent the invention of time travel. And when he was trying to explain to Mulder at the end of the episode, he says, "You don't know what it's like There's no past. There's no future. There's nothing. It's just complete chaos because everyone had obtained access to time travel. And when you did something that I didn't like, I would just zip back. I would jump back before you could do it and change the timeline. And then someone else would do it to me. And it was just, I mean, you can imagine it would just be crazy. And I think that might be what we are tipping into. And that's sort of what you were describing, Jesse.
Yeah, I want to again emphasize 2 points you guys made in writing, which was, Jesse, you mentioned the live action role playing. And I think the fact that what I was pondering, like, how is this different from the old Yahoo groups, which, back in the day, like 20 years ago, Yahoo groups was the place to talk about stocks and a lot of other stuff. It was really a very active ecosystem. But this is now this is much more like a game where you are participating on and there's a team effort, and you're gonna and so there's all this attraction, as you say, emotionally. That's much more satisfying than just kind of like shooting the breeze. It's all like, yeah, I'm part of the winning team here, and we crushed these bad guys, more or less like a game.
Mm-hmm.
And only you look at your account and you go, holy moly, I bet $5,000. And now my account's worth like 500 grand. I mean, that's real money. If you cash it out, then you just bought a house.
Justice is lucrative.
Yeah. And then Mark's point, which I think is really worth emphasizing in your essay, Mark, was, when it was all insiders manipulating, and it's definitely true that it's always been. I mean, Jesse Livermore wrote the book about in I think the early 30s, Reminiscences of a Stock manipulator, operator.
Reminiscent of a stock operator. Yeah.
And so it was
Edwin Lefebvre.
And so it was the big players who could do this. And then now they're offended. And so now there's going to be an investigation like, well, this is just wrong, right? Because it devolved to the people, right? To Jesse's point about it's now been democratized. If you're part of this game, if you're part of the group that's buying. And so it's not that hard to join these things, right? So hence they shut down the group for some bogus reason. There'll probably be some SEC rules to cut the small guy out. And I think in terms of something unfolding beyond this, I think that's the dynamic I'm looking at is they're going to try to crush these guys from being able to do this.
They're going to outlaw outsider trading.
Outsider trading, yeah,
exactly. And then and that will basically pull the curtain from from the insiders, and then that really the moral justification for the market in quotes will be torn away too. It's nothing but a rigged game.
Part of the American dream, for lack of another all-fitting euphemism to use, was that anyone can become wealthy, right? One of the narratives used to be, you can start a business and you can become wealthy. And another one was you can invest in real estate and you can become a landowner or a landlord and you can become wealthy. But the one that's been most applicable over, call it the last 40 years, 20 years for sure, because every time the stock market goes down, the central banks come in with the stick save and pump it back up again, is, anyone can get wealthy in the stock market. No, that's not true. Actually, you're not allowed to get wealthy if you use the same tactics that the people on the inside have been using for decades, even longer. Like, Charles, there was Reminiscences of a Stock Operator, which was Edwin Lefebvre's biography of Jesse Livermore. There's another one called One-Way Pockets, which I think was later. That might have been like the 50s. And there's another book called Where Are the Customers' Yachts? Right? Because, and it's all, so this has been known for a long time, but what is interesting, as Jesse says, it's the democratization of this. It's like suddenly everybody's got access to this tool, and it is gamified. Like I haven't seen it, but there's some of these apps, it's like the hot or not, not, you swipe left or right. It's like, I'll take it, and you buy stock just by swiping it. Yeah. I'll take it.
And that's why the skeptic in me always has to ask, so who benefits, right? Like, and I'm not, on the one hand, I'm obviously a firm believer in democracy, right? I believe that all people should participate, should have agency, should be informed, should have a liberty and responsibility. but I am the kind of guy who, when I see a mob, I don't think that mob is thinking for themselves, right? I always ask myself, who worked that mob up? Who stoked them up? Who benefits from that? Who's paying them, right? That history is full of crowds who were paid off, worked up, manipulated, all senses of the word. And that's why, Mark, that was my response. Like, this could be like the opioid crisis, where there isn't some evil drug dealer. There's just a lot of doctors, a lot of pharmacies, a lot of pharma companies who all got rich. So it wasn't some evil conspiracy. It was a conspiracy of negligence. It was a conspiracy of immorality that they just didn't think twice. And I wonder if there's a similar dynamic under the surface here, both in terms of the brokerages that benefit from all this activity, right? Who benefit not from sound investing, but from, gaming the system, from priming the pump, and the business model that incentivizes this activity. But then even on a psychological level, I wonder, if I was a billionaire, right? And, and I had money, I could either hire someone to help me become an Instagram influencer, like why? Or I might hire a boiler room team to manipulate Reddit to my benefit, right? Or I might hire all sorts of given that the blueprints to manipulate social media are out there as open source data, if I'm a greedy capitalist, why would I not allocate a modest amount of my resources to gaming the system, right? And that's where fundamentally, even though this is a free-for-all, because it is, and any idiot on Reddit can play, as they should, more power to them, you do have to recognize that this isn't a fair game, that there are whales at work who benefit and who have the resources to tip not just the stock market in their favor, to tip Reddit in their favor. And that's the sort of thing that I personally would be interested in from like a study or a news perspective. And that's where I again feel that I felt we were, as usual, ahead of the curve. We were writing about GameStop at the start of the week, and we were like, look at this stuff. This is interesting. Ahead, yeah. And then once the mainstream media shows up, I'm like, all right, I'm out. Like, this conversation's too boring for me, because they don't ask the right questions, they don't look under the right rocks, and they just add more bullshit to the conversation, and that's frustrating.
Well, to your point, Charles, I'm going to jump in here for a second. What you talked about, how the whales and the billionaires can move this system to their benefit. It's not just hiring a boiler room to pump a stonk on Reddit. When CNN trots out a bunch of talking heads to say this is manipulation and should be illegal, that's the same kind of behind that are a bunch of whales and billionaires saying we can't have this.
But my point, to use our network state versus nation state refrain, is today, through proxy, we're starting to see some of the new players. Like, there's some new players in town, right, who have the money to move the market in ways that they always have, but instead of CNBC, they're using Reddit. So these are the players we should be watching for, because they're the players who are ready for the future, not the old school whales who are, carcasses on the beach.
I'm still interested in those carcasses, because those carcasses call in their favors from, DC and say, well, we have to have a Senate inquiry now. We have to outlaw this now. We have to set a bunch of new rules and move the goalposts so that we get to keep doing this stuff and nobody else is allowed to do this.
But look, here's the other recurring argument we have on this show. This proves DC is irrelevant. This proves that, that world is over. And that we need to be focusing on the new world, because it's the new world that allows GameStop to be valued at the price that it is.
That world may be over, but it's not going quietly into this good night. And it's going to make everybody's life miserable as it goes kicking and screaming down the toilet.
No, people are miserable anyway.
Well,
Charles, what do you think?
More so.
Well, I want to speak to what Mark mentioned about the so-called American dream or global dream, right? And it used to be related to hard work and saving and this kind of stuff, right? Investing wisely. And I'm sure that your maybe some of your parents also had a mutual fund, or it was normal that you invested in something, and it would be like a tractor company like John Deere or General Motors or something. And if you were really risky, you might invest in Apple in 1998 or whatever.
IBM.
And so yeah, and so now it's a different story, and I think it speaks to something I've written about, which is the old pathways to quote success have all been shredded. The social mobility ladders, the rungs are mostly broken. You did all the right things. You went to college, you borrowed a ton of money, you got a master's degree or an MBA or even a law degree. And then it turns out you're making 30 some thousand bucks a year. The ladder's broken. So this whole casino that we're discussing is the path forward. In other words, this is how you do it, baby. Yeah. Forget the law degree and working 20 years and 70 hours a week. It's like, if you just can get the one right trade with, I love this expression, diamond hands. In other words, you have a conviction and your hands are literally made of diamond. You never let go of that position. So there's the famous guy, apparently in the Reddit group, who Tim Knight wrote about. He invested $50,000 in out of the money calls on GameStop over 6 months. In other words, he was buying when it was $5. It went to $4, and he lost money. I mean, half of his position was underwater, but he just had diamond hands. He just clung on, kept adding. And then now apparently he's worth somewhere like $40 million. It's incomprehensible.
Now you understand the parallel of the narrative you're sharing, right? And because it's not just the narrative of GameStop, it's not just the narrative of capital markets, it's the narrative of algorithms, right? It's the narrative of fame and status in an algorithmic economy where we are all serfs. There is no upward mobility. You are born a serf, you die a serf, right? There are lotteries where, you were Elon Musk's roommate, or Mark Zuckerberg hired you in those first 6 months. So now, as a result, you're part of the petit bourgeoisie or the petit, feudal lords. But for everyone else, you pray to the algorithm. You pray to some sense of hoping that it recognizes you or it works. And the capital markets are just the high stakes equivalent, right? It's just the, bigger risk, bigger reward. But it's the same algorithms. It's the same statistical, infinitesimal chance of success, and people feeling that they got nothing else going for them.
Even, I sometimes I'll just let my mind kind of run with an idea just to see where it goes, even though I know I'm going to dismiss that idea at the end of it. I just want to see how I get from point A to point B. And, last night, my wife showed me like a piece of mail came, and it was like basically a line of credit statement on our house. And the balance is zero. We have nothing against the line of credit, and the available credit is not bad. It's a number. And I thought the stories that Charles was talking about, and you hear like the guy, I was told almost an identical story by the guy in the parking lot who said, "Oh yeah, do you know so-and-so? He put $75,000 in the BlackBerry and it's worth $15 million now." And so I thought, okay, I've been running my business for 22 years, and my life's goal, I want a summer home, and I want to buy the villa in Barbados that we vacation at someday. I end up with that. And it's like, I never see a snowflake again after I retire. And that's definition of success for me. And it's like, well, and I don't own the villa.
Isn't it by your definition there's sensitive people, even Barbados, who might get offended easily by something you would say? Oh wait, you've been a different kind of snowflake. Sorry, I didn't mean.
Yeah. Please continue. Oh, sorry, I didn't know what you were talking about for a sec. Yeah, no. Okay, I get what you mean now. I thought for a second you were talking about the company. Just kidding. So I don't own the villa. I don't own the cottage yet. And I'm thinking, I'm walking the dog and I think, what if I just took that line of credit, maxed out the whole damn thing on just buy out of the money calls on everything that went up over 100% yesterday.
Stonks.
Cost GameStop, BlackBerry, Naked, right? This little penny stock called Naked. And it's like, I could be one of those stories. I could be one of those guys that like, and with the amount of money I'm talking, I could be a billionaire. All it takes is one trade, one day.
Put me in, coach. Put me in.
Yeah. And then, so as I think this through, obviously, I'm not going to do that. But then I thought, so what this really means is I should be shorting the hell out of everything right now. And I've thought that so many times over the past 4 years, and I've lost every single time I've had my head handed to me. So we're kind of in this world where it's the most logical thing to do, you get penalized for. The most reckless thing you can do is almost a 50-50 crapshoot. Like GameStop today was quite the roller coaster. Of course, I would never, ever do that kind of a thing. But it's really rewarding the dopamine and the status and the lulls of just doing something completely, the YOLO trade. YOLO trade on a massive, massive scale.
But don't forget that this entire exercise is about cognitive bias, right? And whether people are conscious of that cognitive bias or unconscious of that cognitive bias, that doesn't stop it from being an exercise in cognitive bias. And you just exhibited that there. And on the one hand, you had this realization of your own psychology that because you were thinking to go do this, you were like, whoa, that means other people are thinking to go do this. And then you had the wherewithal to counter that, right? Which is wise. But then you forget that none of this is rational, right? So there is no predictive element. It is entirely random. So you're looking at a roulette board. You're seeing that 11 hasn't been hit in the longest time. So therefore, statistically, you know that 11 is due. So
it's a lock, baby.
Right,
it's a lock.
You put all your money on 11. It doesn't hit. But then the next roll, it hits 11. And you realize you were just one off. You could have been a contender, right? It was just so close. And that's where we're at. That half of this really is true because we believe it. And yet we believe it. Like it's a paradox, right? Like and that's what I mean where I'm not convinced we're headed towards catastrophe. And I'm not even sure we're headed towards more chaos. I think we're headed towards more games. And for those people who are ready to play games, or at least are wise enough to know when not to play the game, that I think is going to be the advantageous position, right? And not to be self-serving or to reveal my own current obsessions, but that's why I think Twitch as a platform is poised to blow up, because it combines the culture of gaming with the power of television. And I kind of feel that the two of those, with the third being the interactive culture of the internet, creates a very conducive beer hall for political organizing, or a boiler room for business moving and shaking. In the sense that after the incidents in Washington, D.C. a few weeks ago, I tuned into Twitch and was fascinated by the first-hand accounts that I got. And yesterday and today, I tuned into some of the stock trading people and the people who follow these numbers up and down and press and go and buy and sell. And I'm like a voyeur, right? Like for me, it's coming into another world. But it was better than what I could see on Twitter, even though the jokes on Twitter were pretty good. And, Reddit is fine and all, but Reddit is too much in the thick of it, right? I like having a little critical distance. And that's where I think these are wild times. I think these are interesting times. And I think that they are, I hate to use this word, it feels like cliche. I think they're evolutionary times rather than revolutionary times, right? I've always been the kind to desire the revolutionary kind. And anytime we go from winter to spring, that's when revolutions happen. So if there was ever going to be a revolution, it's going to be a pandemic revolution. It's going to be, what we're seeing happening around the world. But I actually anticipate we're seeing more of an evolution, that we're seeing a much more stable kind of social change that doesn't involve any pushback from government, doesn't involve any, people in the streets, but involves a wholesale shift in behavior and a wholesale shift in culture, which is part of what I think GameStop is as a day of reckoning for capital markets.
Yeah, these are I'm very interested in like both of your comments about where does this go? Where could this go? And I'm just going to comment on the enormity of this in terms of its scale is really quite extraordinary. And so that suggests the potential for more happening than just in stocks, just because of the scale of things. By which I mean, like a year ago, if I'd said, okay, let's look at the option chart, that shows you the puts and the calls and how many puts and calls are outstanding in each strike and each month. And you'd see that for most stocks, it might be a couple of hundred, might be a couple thousand options, right? Now, if you look at Tesla, it is an entire economy in and of itself. Just the option structure in that one stock is larger than most national economies. I say that without exaggeration. I mean, the amount of money invested in Tesla options is in the billions, because there are hundreds of thousands of options, and way out. It used to be like, if you were going to trade, if a stock like was $100, there'd always be nobody betting it, buying options at 200. Like $100 out of the money. You're basically betting the stock has to double before you'll see a dime of profit, and that's pretty. So. Well, now in these stocks, it's like, oh yeah, you're $100 out of the money costs you $100. In other words, the market makers here are just making billions. To your point, Jesse, cui bono, to whose benefit? Definitely the market makers, because they're charging these huge premiums to sell you an option that are just mind-boggling to me. I mean, $80 per option. A normal option might be $2.50, meaning you multiply that times 100. So,
well,
but it's like incredible scale. That's all.
Well, and that's where, I brought this up a few times in past episodes, how I've been, as a farmer, as a herder, I've been really noticing the herd mentality that has been more evident as a result of the pandemic. In part because economic supply and demand is more pronounced, right? There's been surge buying and there's been pressures on supply chain. And I almost feel that what we're currently seeing is a propaganda exercise by the market owners, by the people who are the market gatekeepers, in that while, I get Mark's conspiracy theory that all this is a way for, Washington, D.C. to further corrupt markets, in favor of the ultra wealthy. I don't deny that as a very real possibility, but instead,
it's not a conspiracy, it's an outcome. But anyhow,
agreed. Fair enough. A notable distinction, but nonetheless, I feel a more likely scenario, or a conspiracy, that was the word I was personally trying to evoke, is the normalization of markets. That, to you guys' point, there had been a growing consensus, a growing chorus of people who were saying, this is nuts. Like, this is so disconnected from reality that, we may believe in the efficiency of markets, but these markets are not efficient. And therefore, we need to completely reassess how they work. And yet, right at the moment when those people are most vulnerable, they've also got more participants in these markets than ever, because there's all these guys at home during the pandemic with money to spend that can't get to the actual casino, might as well get to the virtual casino called the capital markets. And so this is all an exercise in hyper-normalization, right? In trying to make the absurd normal by creating an episode that is spun of, hey, isn't this so absurd? But gets reframed as, hey, the little guy has his moment. Welcome, retail investor. We value your input here in the capital market. Our sausages are custom made for every customer. Here's a sausage just for you. I mean, at a certain point, you got to see through it all.
I mean, we've talked about this before too. The anarcho-capitalist in me has a very simple solution to this. And that is you never bail out any company for any reason, anytime, anywhere. However, I believe that even the anarcho-capitalist in me would say that solution is now off the table. Like the last best time to use that solution was 2008. And now it's if we use that solution now, it really kind of is let's just bulldoze society and start it over again. It's going to be Mad Max. So we're not only is it hyper-normalization, we're kind of painted into this corner of hyper-normalization. I don't keep meaning to make pop culture references, but I do remember a Flintstones episode when I was a kid, and they had been transported to the future where there was no money and all they had to do was sign stuff. And I mean, I'm going from memory, like I saw this 40 years ago or so. And they were in this restaurant, and the waiter was explaining to them that there was this huge economic crisis because people just signed so many numbers away that the numbers got so big. And it was all started by a guy named Fred Flintstone. And hey, wait, you're not Fred Flintstone, are you? And they're running out of the restaurant. But the thing was, all we got to do is sign the number, and the number goes up and everything's taken care of. But even at some far-flung point in the future, it becomes unsustainable. And the problem now is I think if we're not at that far-flung moment in the future, we just kind of got on the entrance ramp to it and we're barreling at it full speed.
See, and that's where I'm not so sure. I mean, to use your analogy of the entrance ramp, maybe we got on an entrance ramp, but it's an entrance ramp to nowhere. And we're just going to go around and round and round and round and round until at some point
it's going to stop and we just go flying off the end of it.
Well, okay, here I'm going to bring us right back home again to classical antiquity. What if when I describe that on-ramp to nowhere, I'm describing Plato's cave, right? And so, we would, in theory, suggest that the best ideal is to get up and out of the cave. That was Plato's argument. And perhaps alternatively, to not do anything and just entertain yourself with the shadows on the cave. Well, that's not the end of the world either, right? Like, to remain part of the simulation, who can fault necessarily someone for choosing that? And I just think we're seeing, to my earlier point, the evolution of the simulation. That the simulation is adding more and more complexities to sustain itself because it's at a crisis moment where more people are likely to question the logic of that. And to take your point of impending collapse and maybe affirm your perception of impending collapse by then bringing it back to my own position of the simulation and its cracks. What if we start suggesting that money is make-believe, that money is arbitrary, that money is an inefficient means of allocating the resources in society? And in particular, to go to arguments Charles has made in the past, what if the problem with money is that it allows us to do things like destroy the planet, like have abstract levels of extraction and cause and effect that make it think it's okay to pollute in a sea because we bought credits on the other side of the world that meant it was okay that we did that. Like maybe that entire value system is falling apart. And I think there'll always be something that replaces money as a value exchange system or a media system. But do we know what that is? Like maybe blockchains are a pathway to it, but not the destination itself. Or maybe attention is a pathway to it, but not a destination unto itself. I'm brainstorming. I don't know, but I highlight this as indicative that you're right, that change is afoot, but I don't think any of us know what that change might be.
Well, let me bring up another pop culture reference here. And my memory, I don't remember the name of the film. It's a sci-fi movie, probably within the last 5 years. And the premise is we're all time stamped and we have to get credits.
It's out of time.
To extend our life out of time. Right. And
Justin Timberlake was in it. Yeah.
Yeah. It's a very interesting film because it ends up in a casino, right? Where there's people gambling what little, time or credit they have. And so I think to Jesse's point, we've made money the equivalent of almost everything: time, resources, you know, the flat in Barbados, political control. And so if that kind of like vanishes like mist, well, then it's certainly a huge opportunity to sort of reground instead of having this one abstraction that controls everything.
Which I would point out is the big flaw of Bitcoin, right? Bitcoin has a lot of benefits going for it. Its primary flaw is that it's tied to the concept of money. And that a real revolutionary currency might be tied to something, I don't know, like labor. As one example, right? I mean, there's many others that I could think of, but I'm just saying, right? There's other ways of imagining how we measure currency and how we allocate resources.
I was going to say Ethereum could actually, I have high hopes for Ethereum, and even Jesse is obviously alluding to Charles's concept of climb, which we're going to slowly nudge forward over time. I was going to just throw one thing in before that. I still sincerely believe that markets and money would work if you didn't try to politicize out consequences of economic decisions. I think.
Say that again.
So even I think the concept of money, even if the mechanisms of money evolve over time, I think the concept of money and markets would have worked had we not abstracted away the consequences of economic decisions and overridden them with political constructs. So if an example would be,
again, I'm sorry, I just want to make sure I understand correctly. And ironically, I'm also giving a chance for the video and audio to rebuffer. You're trying to argue that economics can be considered independent of politics. Is that right?
Well, I know that's not really going to fly, but what I am trying to say is, I suppose maybe as a race, we're incapable of thinking long term, and that's where politics comes in. Politics tries to take the immediate trade-offs that have to be made in the present and try and come up with the least painful solution for it, which is why economics becomes hopelessly intertwined with politics.
Again, I wouldn't define politics that way. I would define decent politics that way, but bad politics doesn't even accomplish that.
No, it doesn't accomplish. All it does is make it worse. It makes everything worse. I mean, to use your example of pollution, right? I truly believe that had market signaling and market functions been allowed to function, it would become uneconomical to pollute, to try to externalize your negative externalities, because your costs would go up in other areas to the point where it would not make sense to do it.
So I'm not going to agree or disagree with that proposition, although I think it's really worth just having a conversation about, because I think it's interesting. But it's a political statement. Like what you just said was
it has to be, actually.
Yeah, right? And that's just it. Yeah. Like, the same way that I think where you and I have common ground is that the politics of the people in charge generally is stupid. And that they've been incompetent, they've screwed things up. Right?
I will not dispute that.
Yeah.
I will stipulate to that.
Right.
Yeah.
And there's a certain amount of literacy required to even make that statement. Right? And then there's the people who are able to make that statement, but then they don't have enough critical thinking to get past the charlatans and con men who prey upon people who have gotten to that statement, but who are unable to think of themselves in terms of how they would like to see it, which is to start imagine better systems. Because, for example, the other area I think you and I could find a lot of common ground is a desire for greater transparency, right? Because that's one thing that I've been thinking about with this GameStop and the retail investor mania is if if one of the outcomes of this mess, if one of the regulations mandated was radical transparency, so that all activity in capital markets could be scrutinized by anybody, that to me would be a positive outcome. Because that would not only illustrate the presence and role of whales, but might make it a little more easier for retail investors to be informed, right? To have an actual chance. Because you could then have all sorts of analytic services and other types of, value-added layers that made sense of all the data that was available in markets. But that's a political statement for me to say that.
There's a lot of that already, though.
Agreed. Agreed.
To that point, there's a lot of transparency there.
But my point is just that that's a political statement. That in calling for transparency, in suggesting that transparency is one of the possible remedies to, say, social media bias and platform corruption and arbitrary content moderation, that's a political statement, right? And that's what I mean by, like, I think it's important to talk about policy. I think it's important to talk about politics. I think the fact that all the politicians, most of the politicians we've ever experienced in our lifetime are incompetent, corrupt, or narcissistic, that doesn't mean that we shouldn't still talk about politics, right? Or shouldn't still talk about policy, because I think that is how we go past just being critics to thinking about solutions, is to imagine what a libertarian political economy would be, to imagine what a participatory political economy would be, to imagine what a capital market that was accessible, inclusive, and transparent would be, so that you would then actually get more efficient systems and more trustworthy systems in terms of the difference between what we can imagine and the shit that we currently got.
That sounds like you just described what we're trying to do with the climb system, kind of like, here's a whole setup that's got its own rules and incentives, and we think it's a good policy. In other words, it's a trustworthy, transparent, decentralized, distributed system. But maybe we need to do this to fund that climb system. Let's incorporate AxisOfEasy and the Toronto Exchange, okay?
As a SPAC.
As a SPAC. Then hack Elon Musk's account and then have a couple word tweet highlighting our Stonk.
Ticker symbol AOE.
Okay, I since I'm now party to a conspiracy, I'm saying I disagree. I do not consent. I think you guys are nuts. That's terrible. I have nothing to do with it.
Yeah, I think I am joking, but it goes to show, I guess, that part of what we're talking about here, without talking about it, is human greed and fear. They rule the capital markets and a lot of decisions. And so transparency is one sort of balm, because it does allow you to make rational decisions if you choose to make rational decisions.
Well, and part of my point is, systems are designed for outcomes. And in many cases, if you want greed, you configure a system for greed. And, to my earlier point that you seem to phrase in Latin so eloquently, and me being the unlearned, unread person I am, can't recall that. But who benefits from everyone being greedy? There's a great line in biology, right? That the selfish person is successful, but the cooperative person is even more successful. And that's the other lesson that we've saw in this recent, Wall Street Bets example, that when retail investors worked cooperatively, they were able to overcome some of the greedy whales who dominate the market. And that, I think, speaks a lot to how a more transparent system or a differently configured system could result in different outcomes.
And by differently configured, what I would add to that is that I think everybody needs to be able to play by the same rules, and the rules can't be applied asymmetrically, and everyone should just basically have to face the outcomes of their decisions, especially in capital markets. And until we get back to that kind of system, there's going to be too much moral hazard to have this not happen and accelerate.
And I think the context in which you're making those statements is my point about the algorithms. That, for example, in social media, all the platforms have rules, but because the content is so large, because everything happens so fast, no one knows if the rules are evenly enforced, and everyone has anecdotes that they're not. And the same thing applies to capital markets, that the rules are not evenly applied. They're not transparent, so we don't know where the corruption lies. We don't know who gets away with breaking the rules and who doesn't. But the fact that people don't perceive the rules as being fair is in and of itself part of the issue, right? And with algorithmic trading, there's literally so many trades going on that people don't know why those trades are happening or who's doing them or for what reason. So I think the problem of how to deal with algorithms is at core part of the larger problem we're describing when it comes to having rules, when it comes to making sure that they're fair and to ensure that they're enforced evenly.
Yeah, there's this idea that algos, the purists or the idealists would say algos are going to make everything even and neutral and optimized for everyone. But I don't, and I don't think anyone here would disagree that, algos are biased in themselves. And what the algos also do is they accentuate and they amplify the flaws that are already built into the system. So the biases that are already there when you design a system, you add algos to it, especially like in the capital markets, the HFTs, right? And it's just going to blow it up even bigger.
Well, I agree 100%. Although what I would add based on the research I've been doing and ongoing is there is always trolling. I would say that what you described is the default. That if you do nothing, your algorithm will amplify the existing biases in the system. But if you go through the exercise of exploring what the existing biases are, then you can program your own biases into your algorithm. Now, that algorithm may not be successful because those biases may be contrary. Like if you go into the capital markets with an altruistic approach that ignores your own self-interest, but invests entirely for the greater good, then you're probably not going to be successful at the game called capital markets, right? But I think the moral of GameStop is that trolling can work out, that you can have biases, that are baked into your own algorithms that are contrary to the existing biases that cause chaos, that cause disruption, that cause new things. What those are, we don't know. But it's me saying, yes, biases are endemic, but what those biases are, I guess that's where the battles are going to be.
Battle of the biases.
There's your session title right there.
Yeah, Charles,
GameStop and the Battle of the Biases.
Yeah.
Sounds like a good place to end our exploration today.
All right. More next time. Thanks, everyone, and we will see you on another day.